Good morning and welcome to Market Day Report. I'm Chris Swift sitting in for Marlon Boland this morning, and we have got a full week of trading lined out here for us. And let's take a look at our corn board and see how we got started with everything last night and how we're going to open up this morning. A little bit firmer in the corn from last week, up 2 cents on the December at $4.94 even. March now hanging well above the $5 level at $5.09.5, up 2 1/4. And the July corn up 2 1/4 at $5.22 1/4. The soybean market's been firmer this morning as well. I've got November up 4 3/4 at $12.70 3/4. The Jan beans up a nickel at $12.89.5, and out to July beans up 4 1/2 at $13.24 3/4. Chicago wheat this morning had been a little firmer. It was a little firmer last week. December up 8 1/2 at $5.76 3/4, had a $5.81.5 high and a $5.72 low. March up 8 1/4 at $6.06 1/4, and July 6.40.5, up 6 1/2. Kansas City hard red winter wheat up 7 1/4 on the December, 6.81 even. March up 6 3/4 at 6.89.5. New crop July up 6 1/4, 6.98.5, and we'll wrap it up with Minneapolis spring wheat this morning. And it's pretty much firmer, up 8 1/2 on the December, 7.29 even. March is up 7 1/2 at 7.52.5, and May up 8 1/4 at 7.67 3/4. I'd like to invite my guest in, Brian Hoops. Brian is with Midwest Market Solutions. And Brian, we got a full week of trading this week and got seemingly very dry weather and harvest progress going on very quickly. A little bit firmer start to the week. What do we see in front of us?
Good morning, Chris. Yeah, it could be a pretty interesting week. Looks like there's a lot of rain in tap for Minnesota and northern Iowa. Could see some harvest delays there. It's Columbus Day today, so there's no government offices open, so we won't have the export inspections or crop progress today. They'll be delayed until Tuesday morning. All our reports are going to be delayed, EIA report and export sales as well later in the week. And really a lot of the focus, I think, is on Thursday's supply and demand report and some positioning going into that. Of course, we had a lot of political unrest and the devastating attacks that's happening overseas. That really rallied crude oil futures overnight, originally put some pressure to the dollar and supported a rally in some of the other commodities like gold, silver, and corn, grain, wheat markets. But as we come into the morning hours, it seems like maybe the markets have kind of settled down. The dollar has rallied again. Crude oil has backed off of its highs. And we're looking at the grains now, trying to figure out what's our direction over the next couple of days until we get to Thursday's reports, because that will be, really the main driver going into probably the end of the month, actually.
So when we look at marketing, we know we've probably still got a tremendous amount of marketing to have to do. And looks like storage, again, is going to be the story pretty much this week with the Mississippi River as low as it is and barge traffic kind of slowing down. So is there anything that maybe steps out in front of you? We've put on 10, 15 cents in the corn over the last week. And is that enough to really start doing anything? We're going to be a little patient and see if there's not another maybe 10 to 15 cents this week.
Yeah, I don't know if we're going to see that type of movement this week. The report, it looks for a very small change in corn yields, which when the trade guess is looking for a small change, you can almost bet we're going to see some large number from the USDA, a large change. And whether that's a lower yield or a larger yield is really hotly debated. I'm leaning towards actually a larger yield than what the USDA says. So that could be, if that's the case, it's going to be certainly bearish, as ending stocks are already burdensome. If we start adding more yields on, we're looking at, carry out approaching 2.3 billion bushels. So yeah, if you want to look at marketing from a standpoint, hey, we've had a good rally in corn. We can't get above the $5 mark seemingly. Look out into the summer futures. There's a large carry out there, 28-cent carry from December to July, and for soybeans from November to July, it's even larger. And a big reason for that is because the market's telling you we just cannot have all this crop hitting our terminals right now because we have low water levels on the river. We're not moving enough of this product. We have to have it later into the spring and into the summer, and the market's willing to pay the farmer to store it through the winter and then deliver it into the spring and summer. So there's that incentive out there. The carrot's been dangling for the producers to take advantage of that. So there's some real basis opportunities and storage opportunities by selling the carry that producers can take advantage of. And of course, they can always come back in with futures and options and reown it, and have a really good marketing program going throughout the winter into the spring and summer months.
Fantastic. Brian, stay with us for just a minute. We're going to go away and take a commercial break, and we'll be right back with Brian Hoops, and we're going to talk a little livestock. Stay with us. Welcome back to Market Day Report. I'm Chris Swift. We had some pretty hard selling last week in the livestock market, and so let's take a look at how we closed out the week last week and how we're going to start this week. Towards the end of the week, we firmed up just a little bit, and the October contract up $1.12, 183.07. And if I'm not badly mistaken, I think we traded 182 cash, 183 cash last week. December up $1.30 at 186.67, and the Feb's up 117 at 190.77. The feeder cattle market regained a little bit of its losses. It took the biggest hit. October up 87 at 248.37. The November up 57 at 250.87. And going out into next year, the March contract 257.22 up 62. We'll wrap it up with the hogs this morning, and we're looking for last week closing a little bit higher, up $1.42 on the October, 82.32. We know we had some pretty heavy selling in the hog market last week earlier. December up $1.30 at 73.57, and Feb up 162 at 77.57. I'd like to invite my guest back, Brian Hoops. Brian is with Midwest Market Solutions. Brian, we saw a little bit of, I saw a little bit of carcass weight gain week over week in the cattle market, and I know we had a real big downturn last week there, lost a lot of open interest. You think we're going to regain some of that back this week, or are we kind of already maybe unfortunately turned the corner?
I think we could put a little back on this week, at least initially. Going farther down the road here, I think we're going to be, a little bit softer. Just my expectations based off of packer margins still being negative and weights trending a little bit higher right now. I was a little surprised, Chris, that we saw many cattle slaughtered last week as we did, 628,000, which, normally that's not a great number. You'd like to see 660,000 head kill, but we were looking for something under 620,000. So a little bit of a surprise there. The packer margins did improve slightly because of a gain in the box beef, but they're still deeply in the red. So I don't know that we're going to see higher cash trade this week. I'd look for a steady type go at best, and maybe a little bit softer, similar to what we saw this last week.
And I know the consumer has been resilient. That has been a really good word to use, and I've heard it multiple times in various different sectors of the industry there, and especially of the economy, where there has been resilience of the consumer. So maybe they'll be able to keep up just a little bit here going into the fall of the year. At least we know we got some pretty weather coming up for them to be able to do that. So Brian, I certainly do appreciate you taking the time to be with us this morning. That is Brian Hoops. He is with Midwest Market Solutions. So Tammy, get this Monday morning ripping and roaring.
Columbus Day. I forgot it was Columbus Day.
It is. So banks are closed, so we won't be able to meet the margin calls, but we will be trading to get them in.
So we're here for you. Thanks, Chris.
Absolutely.